Over the Road article, January 2009. January is new beginnings. After celebrating the beginning of a new year, I'm always reminded of the two actors who usually play Father Time. One old, long-bearded, wrinkled fella and another one jumping around in a diaper. Actually, the old guy may have a diaper too, but we can't tell under his robe. It represents wrapping up the old year and ushering in the new beginnings. So, let's clean up your finances. You're about to go to your accountant again, complete with your shoebox full of receipts and statements. You are tempted to put the meeting off because you don't know what to expect for your tax bill. Bloodthirsty vultures, not the accountant, the tax man. Since the publication of my book, I've talked with accountants coast to coast. After only a couple of minutes, we generally settle into a respectable understanding of the accounting industry. In my experience, there seems to be a vast amount of difference in information, standards, and understandings about the tax opportunity. Let's go over the basics as it applies to changing. Over 80%, possibly even 90% or more of all lease owner-operators are classified as self-employed. They are that way because that's how it's always been done, which is a very sound argument for most accountants. Most firms who complete tax returns for operators do not exclusively serve the trucking industry. Operators generally represent only 5 to 15% of the average accounting firm's clientele. So when an operator goes to their accountant and tells them this new going concern is incorporating, they ask if she can do it. Not wanting to lose a client, they say sure, and the operator thinks they're automatically saving the big bucks. Unfortunately, and too often, the accountant simply completes a corporate return in the same format as the self-employed status and, unknown to the operator, misses the best advantage. Everyone should be clear, using the estimated reimbursement for job-related costs, specifically per diem, does not reflect the same cash and paper activity as does self-employed status. Everyone, especially the accountant, needs to understand the system first, then decide if the firm wants to defend the system application to Canada Revenue Agency. An overview of the system has 3 primary points. Only employees can qualify, hence incorporation. They must have an employer-employee agreement, and the agreement must be followed. CRA is pretty clear about all 3. Accountants instinctively know CRA will be focusing on the followed part. The general rule of the system, in combination with the employer-employee agreement, must be reflected in the remittances and at audit trail. It is at this point where many accountants lose interest in the system. Accountants want to be assured that their firm's version of followed matches CRA's version. If they're not intimately knowledgeable about the application of the system, many firms just abandon the opportunity, saying CRA won't allow it. However, once firms become educated about the system, they must ensure the corporation and driver fully complies. In a firm whose clientele is only 5 to 15% lease owner-operators, this means added work and time for the accountant, a precious commodity for every firm. Most accounting firms can handle the paperwork but aren't interested in accepting or even interested in training. In our experience, it takes approximately 2 to 6 months before an operator's comfortable with the new style of business transactions. The final nail for the accountant usually comes in the form of CRA audits and defending the entire return. At present, very few firms seem to be willing to openly defend it. They either say it's too risky or require clients sign waiver. In other words, the operator becomes self-insured. When an audit occurs, they are on their own. If the accountant was just guessing on how to follow the rules, and the guesses end up being wrong, it's the operator who pays, not the accountant. It's a sobering dilemma, a dilemma that will probably disappear in 3 to 6 years, maybe 8. once the accounting industry and rogue auditors coast to coast fully understand the application. But until then, I recommend operators either personally know what they are doing themselves or find the firms with a complete package specializing in applying and defending per diems or subsistence allowance. If the whole opportunity seems more bothersome than you'd like, then keep everything the same. Just don't complain when those who use the system pay $6,000 to $8,000 per year less than you do. Nothing really good comes easily, especially in beginning new things. Have a good trip.